Can I start them, sir?
Yes, please start.
All right. Dear shareholders, directors, auditors of the company, ladies and gentlemen, very good morning. It gives me an immense pleasure to welcoming you all at the 52nd annual general meeting of the company through Zoom audio video conferencing facility provided by CDSL. I trust your family and you are keeping well. To start with, we announced our FY22 results on May 17th. MPS recorded unprecedented earnings per share in FY22. The excellent business performance in FY22 results from a journey that started a decade ago when the change of majority ownership from Macmillan to ADI was completed in 2012. The timing is relevant, but more importantly, there's a great deal that I want to share with you about the company, including a deeper understanding of what got us here, the specific progress in the last 2 years, and our growth strategy that envisions a new scale for MPS in FY27. And while I've never believed in 5-year business plans, I believe it is important to have and own a bold vision. Put in more work than anybody else will to pursue that vision and stay relentless, because while there'll be ups and there'll be many downs, and we all learn more from failure than anything else. Ignore the naysayers, because growth comes with optimism, and while the paranoid do survive, it's the dreamers that thrive. Let us begin by understanding what got us here. Macmillan gave us a great platform. At the change of ownership, the exiting chairman of MPS from the Macmillan side commented that they were handing over the jewel in the crown, and we must nurture the legacy. And yes, his comment was on point, because MPS possessed more capabilities and depth than anybody else in the marketplace. What was missing was a drive towards speed and efficiency that customers needed. We brought that perspective in by moving the organization to a flatter structure powered by a culture of agility. And that assumed efficiency was table stakes. The setup of infrastructure that was impressive on a global scale in Dehradun allowed us to be more competitive than most. And the small mercy of the rupee depreciation offered us additional tailwinds in FY12 and FY13. Our historical dominance was in content solutions outsourcing with a strong focus on scholarly publishing. Though our ambitions were grander, we scaled our presence in the education market through the acquisitions of Element, EPS, and TSI between 2013 and 15, which also helped us establish meaningful onshore operations in the US. The momentum allowed us to raise growth capital via a QIP process in 2015, which funded the next 3 acquisitions. The acquisition of MacPlus in 2016, acquisition of Think in 2017, improved our revenue quality since they were platform businesses with a high proportion of SaaS-based recurring revenue. The acquisition of Tata Interactive Systems in 2018 powered a definitive entry into the e-learning space with operations in India, Switzerland, and Germany. The expansion also opened us to newer markets, including corporates and educational institutions. Our most recent acquisition of Highwire in 2020 further improved our revenue and quality, as Highwire again was a platform play. All acquisitions we have completed were motivated by expansion of scope to enhance our competitive advantage. The period between FY14 and FY20 was a thoughtful diversification play that first expanded our total addressable market from $2 billion to $310 billion. Second, enhanced our business mix from 100% content business in FY14 to 60% content, 28% platform, and 12% e-learning in FY20. And finally, reduced our customer concentration from our top 10 customers from 75% in FY14 to 53% in FY20. During our diversification phase, all our energies were focused on optimizing each of the acquisitions, because we had acquired assets that were historically premium, but more recently distressed. With each turnaround, we got more efficient and had better upside with each subsequent acquisition. To develop a greater whole, we have begun to optimize the parts in the past 2 years. We have unlocked synergies across the business mix during this phase to further margin expansion. We have developed new revenue streams that combine business interests to solve increasingly complex problems for our customers. As a result, we've seen robust growth in our education business. We've seen a profitable transformation of our e-learning business. We've built a new scale in the research content customer base by successfully delivering through the pandemic, by leveraging a more diverse talent pool than any of our competitors. And finally, we expanded our platform business through acquisition of Highwire, advancing our positioning in the marketplace as a thought leader. The road from here on to FY27 is then about building serious scale. We have redefined our sales and marketing strategy to a market approach versus a product approach to drive organic growth. Our customer interactions are focused on firm-wide capabilities to address customer needs versus a product-based approach. In the research market, we now play the role of price warrior and also bundle our products and services to acquire market share. Our tech IP and low-cost delivery locations are helping us protect margins as per the strategy. To further our momentum in the corporate market, where we have an unprecedented order book, we are scaling up investments threefold in marketing and adding sales hunters in new markets to increase our geographical coverage. We are also going Gesalt in the education sphere by unlocking synergies between content and e-learning to focus on digital and experiential learning. The expansion in education also includes developing a customer base, including educational institutions, education, edtech, and emerging learning companies. We also now have a new acquisition playbook. Our new playbook will further augment our ambition to build serious scale. We are enhancing the first phase of the acquisition playbook, which was about acquiring distressed assets at distressed prices, to moving into the next stage about acquiring growth assets at competitive valuations, like we did with EI Design recently. We are now pursuing growth assets that have inherent financial strength. Our inorganic focus will be on acquiring companies at attractive valuations, ensuring that recently established momentum sees further acceleration. The next wave of acquisition will also give us access to new markets. And instead of taking 5 years to expand margins, we will target margins the second year itself while ensuring high ROIC and timely payback. My vision for MPS then for 2027 is to create a compelling learning company at a meaningful scale that helps the world learn smarter. We aspire to be the provider of choice in our markets that powers experiential learning experiences with the latest tech innovations. On May 30th, 2022, the most recent incident of the acquisition of EI Design Private Limited. As you are aware, FY22 was a transformative year for e-learning business. While our revenue grew by 13.36% in FY22, our PBT grew from a loss of 3.7 crores to a profit of 13.1 crores. The e-learning business has recovered and is now expected to contribute to revenue and profit growth significantly, particularly after the acquisition of EI. On the revenue side, our revenue quality has improved with an increasing trend in proportion of recurring revenue, premium solutions, client relationships, which are deeper, and finally, our customer diversity is also healthier. Apart from revenue growth, there are also significant levers of margin expansion available, including wage arbitrage, focused controls on productivity, and a tighter discipline on expenses. In this momentous year, I would like to place on record a deep sense of gratitude to all the shareholders for the support and inspiration to achieve new milestones of success. May I now introduce the directors, the senior management officials, statutory auditor, secretarial auditor, present through video conferencing and visible on your screen. Mr. Ajay Mankotia, chairman of the audit committee. Mr. Mankotia is an independent director of the company and having accounting, tax, and financial management expertise. He is attending the meeting from New Delhi. Ms. Jayantika Dave, who is the chairperson of the Nomination and Remuneration Committee. Ms. Dave is an independent director of the company and has a wide range of experience in human resources and financial services. She is attending this meeting from Uttarakhand. Ms. Achal Khanna is an independent director of the company and has vast experience in human resources. She is attending the meeting from Gurugram. Dr. Piyush Kumar Rastogi is an independent director of the company, has a wide experience in audit, financial accounting, and corporate law. He is attending the meeting from the US. Ms. Yamini Tandon is a non-executive director of the company and the chairperson of the Stakeholders Relationship Committee and has a wide experience in marketing and strategy. She is attending this meeting from Gurugram. Mr. Sunit Malhotra is company secretary and CFO of the company. He is attending this meeting from Noida. Mr. Rohit Arora, partner at Walters Chandok and Company, statutory auditors of the company, attending from Gurugram, and Mr. R. Sridharan of R. Sridharan Associates, secretarial auditor and scrutinizer for the meeting, attending from Chennai, who are also present and visible on your screen. On behalf of the board of directors, I would like to thank the shareholders and auditors for taking time to join us today. The requisite quorum is present, and therefore I call the meeting to order. I would like to take you through certain points regarding the participation at this meeting. The facility of joining the AGM through video conferencing or other OVAM is being available for members on first come, first served basis up to 1,000 shareholders. All the members who have joined this meeting have been by default put on mute by the host to avoid any disturbance from background noise and ensure smooth conduct of the meeting. Once the question and answer round starts, the moderator will announce the name of the shareholders who are registered as speaker shareholder one by one. The speaker shareholder will be unmuted by the host. To start speaking, the shareholder is requested to click the video on button enabled by the moderator for you. If the shareholder cannot join through video for any reason, the shareholder can join through audio mode. If there's connectivity issue at the speaker's end, we would request next speaker to join. We would like the shareholders to limit their questions, query suggestions to 3 minutes only, so that other shareholders may also get a chance to speak. In accordance with the Companies Act 2013, the rules framed thereunder and listing obligations and disclosure requirements regulations, the company has provided remote e-voting facility to all its members to cast their votes on all resolutions set out in the notice of the AGM from Friday, June 24th, 2022, that ends on Sunday, June 26, 2022. Mr. R. Sridharan of Sridharan Associates, Company Secretary, was appointed as scrutinizer for the purpose of scrutinizing both the remote e-voting and the e-voting at this AGM in a fair and transparent manner. In case shareholder have already casted vote through remote e-voting, she shall not again cast vote during the AGM. And in case you cast a second vote today, your second vote will be treated as invalid. If any votes cast by shareholder through e-voting available during the AGM, and if the same shareholder have not participated in the meeting, then votes cast by such shareholder shall be considered invalid, as the facility of e-voting during the meeting is available only to the shareholders attending the meeting. Your voting rights shall be in proportion to your shareholding as on the cutoff date, June 20th, 2022. There are no directors and key managerial personnel of the company who is holding any shares in the company, and no director and key managerial personnel is concerned or interested in any contracts entered during the financial year 21-22. Register of directors and key management personnel and register of contracts or arrangement in which directors are interested are available for inspection at your login through which shareholders attending the AGM. So should we open the call to the questions, or should I continue?
Please continue. Please continue.
Ladies and gentlemen, notice dated May 17, 2022 for convening this AGM, along with a copy of the annual report for the financial year ended March 31st, 2022, has already been circulated to the members of the company and hence take the same as read. The board, in its meeting held on May 17, 2022, recommended to the shareholders for the declaration of rupees 30 by equity shares of rupees 30 each as dividend for the financial year 21-22. Auditor's report. The secretarial auditor's report and statutory auditor's report on the financial statements, standalone and consolidated, of the company and for the financial year ended March 31st, 2022, does not have any qualification or observations or comments of financial transactions or matters which have an adverse effect on the function of the company. Accordingly, the auditor's report is not required to be read out before the meeting as provided in the Companies Act 2013 and hence taken the same as read. The resolutions to be voted at the meeting are as follows. The ordinary business is set out at page 227 of the annual report in notice of the AGM. Members are free to exercise their vote now by following the procedure mentioned in the notice. Now we will take the questions and invite the speakers one by one who have registered for this purpose. With a view to give adequate opportunity to all, I again reiterate and request members to be brief and concise while expressing their views or asking questions. Please do not repeat questions asked earlier by a member.
Karthik, will you please start?
Yes, sir. Our first speaker is Keshav. So Keshav, sir, you can speak, sir.
Sir, I hope my voice is audible.
Yes.
Yes, we can hear you.
Sir, thank you very much for providing me this opportunity. I really want to congratulate the team for delivering excellent results, all-time high operating profits, as well as buyback and dividend. Sir, I had a few questions. Sir, if you could give us any idea about what kind of top line and bottom line we should be expecting for the current year and also for the next few years. And sir, now, sir, a recession is imminent in the United States, which is a major market, and also in Europe. So in that context, sir, if and when the recession comes, then, sir, will the demand be intact for our company? And basically, will we be able to maintain at least the numbers that we achieved last year? And, sir, also wanted to understand, sir, in page number 194 of the annual report, sir, trade receivables outstanding between 1 and 2 years have increased to 15.1 crore. So is that some kind of a concern, and have we received this money back? And sir, also the rupee has been depreciating. So how will that impact our margins? I understand that it should be beneficial to us, but the interplay of maybe wage hikes and rupee depreciation, sir, so net will our margins still gain this year? And so finally, sir, I should congratulate you for the very good acquisition of EI design at very attractive valuation. So now that approximately 1 month has passed since the acquisition, so what has been the experience with that acquisition, and so are things looking up over there? And so thank you very much, and best of luck to you and your whole team. Thank you.
Thank you. I think we will be taking all the questions and then we'll be answering them comprehensively at the end.
Okay, sir. The next speaker is Abhishek,
Yeah.
not present, sir. So we can move on to the next one.
Am I audible? Am I audible, sir?
Yes, we hear you.
Yeah. Mr. Arora and the board of directors, good morning to all of you. Still, it's not 12 o'clock. Sir, I am very happy with the results. And, the first thing I was just looking at the balance sheet, which I got the copy just 2 days ago or 3 days ago. Happy to read it. But, sir, one small problem is there in the printed balance sheet, sir. On every page of the balance sheet, the totals which are given in water ink. So we cannot read that. It is not readable, the totals. And all the outer column totals are also not readable, sir. The as at 31st March 2020, it is not readable. So see to it that the printing quality is better and we can read the figures, whatever is there for the totals in the profit and loss and balance sheet. That is the first thing. Secondly, sir, when shall we start preparing integrated annual report, if at all? Because I would like to have an integrated annual report, so that will be, following the norms also of the international accounting standards. So thirdly, growth of 5 years decade is actually pursuit of purpose fulfilled, which you had envisaged earlier. And now it is the 10th year of taking over that Macmillan publications from 2012 to 2022. A decade has passed, and it has been a fantastic journey even for the shareholders like me, small shareholders, minority shareholders, because we have been getting regular dividends. We have been getting more dividends. We are sharing the prosperity of the company along with you. Your dividend policy is very good. You are doing buybacks. Now, all these things you are doing, sir. But, sir, what I would like to see is that your vision 2027, 2027, which you have given on page number 4, it may be fulfilled, or can we expect to, go further than the vision also, the next 5 years? Sir, our dividend is rupees 30 as against the EPS of nearly 40 rupees, 39.87 to be exact. Buyback has been at 900, all rewarding to us, to the shareholders. Thank you very much for that. Sir, as expected of your management effort, you are creating value for all, and now you are in the 4th gear of our journey. One small suggestion, if I can give you, sir. Sir, why don't you reduce, instead of giving 30 rupees, you can give 21 rupees dividend, sir. And 9 rupees you do reduction of capital. Now that will be the best thing, because then our share price can reach 5,000 rupees, sir. I can guarantee you that. If the share value becomes 1 rupee, and the capital decreases to only 131 lakhs instead of 13 crores and 10 lakhs, 1 crore and 31 lakhs, that will be a fantastic. Give a thought to this, sir, because this is very important for value creation in a different manner. With the same profits, our profit will go to 398 rupees per share, sir, instead of 39 rupees per share. Now, this thought can be given. Again, sir, I want to know that basically yes. What feedbacks and suggestions you have received during the previous year or current year from your clients, basically, from shareholders, from regulators, which is being still implemented for better results? What do you think about it, sir? Because I want the company to be the best, and we are the best. Of course, we are on a track of being the best in our own industry. But, sir, still you may have located some things here and there in the working of the company which needs still refinement, finishing, improvements, etc. Now, if you can highlight those points, I will be very happy with you and wish you all the best. But, sir, this small point of printing in the balance sheet, the totals are not visible at all. They are just in watering, and we cannot read that at all. So we have to calculate ourselves on the calculator. So please see to it that this type of things does not happen with the shareholders. Thank you very much and wish you all the best, sir. Thank you.
Thank you, sir. The next speaker is Aspi. Ashby Bensala, you can speak.
Yes. Can you see me and hear me, sir?
Yes, we can.
So this is the first time I'm attending your AGM, although I'm a shareholder since many, many years. So congrats on good results in spite of all possible hurdles. So receivables are also reduced on increased income, which is a very good sign. So rupees 133 crore is cash on balance sheet. What are your plans for that? So segment results for content solutions and platform solutions are stagnating. Increase in profit is due to e-learning showing profit from a loss. So how do you see the future? So thanks for rupees 30 dividend. However, I would prefer buyback every year like TCS, or as suggested by my predecessor, a reduction of equity. So thank you and all the best. And I hope you continue with the online meetings next year also, when the physical meetings start. Thank you, sir.
Thank you.
Our next speaker is Naveen Botra.
Hello.
Yeah, Naveen, we can hear you.
Yeah. Naveen Botra attending the 52nd AGM from Delhi. Very good afternoon to our CMD, Mr. Rahul Arora, the eminent board of directors, and the management team attending this AGM. So, first of all, I would like to congratulate the management team as well as to you regarding our good set of operating performance in the face of all these pandemic and geopolitical challenges. We have come out with very good numbers. And as regards our capital allocation policy of utilizing the cash for the buyback as well as for the giving dividends and also utilizing the same for the inorganic acquisitions and in a very optimal way for which we are quite happy. And as you outlined in your chairman's speech, that we are now targeting for the Vision 2027 to further scale and achieve a good size in the coming 5 years. So we applaud the capital allocation policy of the company. So I have a couple of points. Mr. Keshav in his remarks, the first speaker, also talked about the current talks of recession in the US and Europe in the case of inflation and this interest rate increase scenario. So since our 94 to 95% of our revenues are coming from the global market, what is your view regarding our coming this year and next year's prospect in view of all these geopolitical as well as recession talks? Your views will be quite helpful. Second one is regarding the product and platform monetization. Non-linearity through SaaS type of model. Kindly share your views about our various platforms and specifically regarding our couple of years ago we acquired Highwire. So if you can share about the Highwire growth prospects going into this year as well as the next year, because last year it was in the degrowth mode, but profitability was good. So when can we expect respectable growth in the Highwire business? Because now I think it is getting stabilized. So your views, sir. And third and final one, sir, regarding the talent induction and retention. It's a high attrition time for all the technology and other companies also. So in these challenging times and hyper attrition challenges, what further steps we are
Karthik, if we can move to the next speaker, please.
Yes, our next speaker is Praveen Kumar.
Hello, I am audible, sir. Hello.
Yes. Yes,
I'm
yes, you are audible.
A very, very
Yes.
good morning to our respected chairman, my esteemed board of directors, and my co-fellow shareholder who joined this meeting online, sir. Myself, Praveen Kumar, joining this meeting from New Delhi. I have few observations which I love to share with the entire house, sir. Sir, first of all, I am with the company for more than a decade, and over the period of decade, I have a great observation about the company. The focus, the vision which our esteemed chairman has, that was fantabulous, sir. And in your opening speech, you cover everything during these difficult times that our company, growth is, remarkable, recommended and praised to the worthy. And I'm very, very happy, sir. My hard-earned money, it will be in safe hand. And I put all the resolution which you set up for the notice, a great assent to those resolutions, sir. And I wish you, I pray to the God, sir, that He will guide the right direction with so many acquisitions. They're in the right place. You will take our company to the newer height, newer height. One more thing which I love to add here, sir. The company is also decided by the barometer of the corporate governance, where the company reflects to show to the retail investors. Sir. And in this regard, I love to thank our CS, respected Sunil Malhotraji, and their entire team for providing excellent corporate governance. It's not about during EGM or sometime EGM, but throughout the year. If you have any theory, rumor in the market, they will, have a genuine promptly reply. So I'm very, very thankful to that. And I love to thank the entire management for giving me such an opportunity, such a platform to express my best compliment to the share. And I wish you all the very, very best for the coming years. Thank you very much. Thank you very much.
Thank you so much.
All right. Then our last speaker is Vasudevan. One.
Hello, am I audible?
Yes, yes.
Yeah, see, good morning. This is Ramaswamy, Company Secretary, talking from Delhi. Very good morning, Mr. Arora ji, Sunit Malhotra ji, and other board members and the management team. So, congratulations, on the good set of numbers during this year. Sir, I have got the following points for your consideration, Mr. Rahul Arora. Number one, in our $310 billion addressable market. See, as per annual report, page number 4, the market size is $310 billion. What is our share and what will be our cake in this? Next question is, our theme is going get salt in this annual report. See, we have to talk about the focus areas more on the content, platform, e-learning, etc., etc. How we are going to, encash all these things. Sir, and again, in later vein, मजाक से मैं कहूँगा तो annual report में digital disruption की बात हम कर रहे हैं. See, in there is no mention about Web3, metaverse or blockchain, and without involving of all these things, we are going to achieve a digital disruption. So, if we can enlighten us, it will be of more help to us, sir. Finally, thanks for the opportunity to speak. All the very best. My inquiry is to Mr. Utkar Gupta, who is my professional colleague also and a known person also. Thanks a lot, Mr. Sunit Malhotra. Thanks a lot, Mr. Chairman. Thank you.
Thank you so much. Can I proceed to start to answer the
We will
question?
request you to kindly give answers or.
Sure. So firstly, a big thank you to everyone for acknowledging our efforts. Your support is, very meaningful. It keeps us motivated as we try to shape the future of the company. So again, a very warm thank you for all your wonderful compliments and comments as well. I will address a bulk of the questions. I will request Sunit, who's our CFO and company secretary, to firstly take note for the comments on the annual report, specifically around the print format, and make sure that going forward we are able to deliver per expectations. Also would request Sunit to comment on the trade receivables. My understanding is that as revenue is growing, they're growing in the same proportion, but Sunit can quickly answer that. And finally, Sunit to also discuss, forward covers and the impact of the rupee on depreciation on our results. So to begin, there was a question on top line forecasts. I think I can share. We don't really provide narrow forward-looking statements, but I can provide a more general statement, which is that there's two parts to this: organic and inorganic growth. On the top line, on the organic growth side, as you've seen, the content business has significantly picked up during and post the pandemic. The primary reason for this is that we've been able to create significant lines of differentiation between us and the competition as customers have reviewed their supply chain once more. We expect this trend to continue as we have successfully delivered during the pandemic, but also previously during the Chennai floods. Unlike some of our competitors, and customers are viewing us differently. So we expect content to continue to grow between 10 to 15%, organically. And of course, as the content business grows, on the revenue side, margins will continue to expand based on the significant operational efficiency levers available to us, as well as the lower costs available to us in Dehradun. So we are hopeful that as the revenue expands, margins for the content business will start to approach previous levels of margins, closer to 35 to 40% on EBITDA. On the platform side of our business, as we know, we've recently acquired Highwire Press, which continues to be in a phase of consolidation. We expect FY23 to be another year of consolidation where we're seeing a flurry of activity. And we're expecting significant growth from FY24 onward, 15 to 20% growth from FY24 onward. But FY23 will continue to be a phase of consolidation where there'll be a lot of activity on the business development side, but from an order book will expand. But from a revenue perspective, revenue will only start to pick up by FY24 or Q4 FY23. The e-learning business we are seeing robust growth in the e-learning business. Standalone organic growth for MPS Interactive and our other e-learning business interests, we expect over 20% growth in FY23 and onward. Obviously, on top of that, we've now acquired EI Design, which is similar to $6.57 million in revenue and also higher margins. So that will only be accretive to the existing underlying 20% growth. So 20% growth without EI, and then the additional growth that we get through EI. From a margin standpoint as well, as this business has significant operating leverage available. So as revenues expand, margins will continue to expand. So margins will always grow faster than revenue in our business. There was a question on the upcoming recession. While we are a conservative management team and will adapt to all business challenges available to us, while we must also understand the nuances of the business. The business is significantly, tilted towards the revenue coming from North America and Europe. Having said that, we must also observe the industries and the sectors that we operate in. So I'll go sector by sector and what we've seen in past recessions in these sectors. The first and the most significant industry or sector that we work with is research, which basically includes academic and STM publishing. Research is the only industry that has grown consistently at a CAGR of 5 to 7% for the last 100 years or over the last 100 years. We've seen good growth in research, double-digit growth over the last couple of years. And we are hopeful that the 100-year trend that we've seen in the research market continues even during the upcoming recession. So research is the most significant marketplace, and we are hopeful that we will help our customers adapt and navigate the recession, which some believe we're already in. The second piece of this is education. Historically, what we've seen is there is an inverse relationship between economic factors and economic growth and investments in education. Typically, during a recession, whether it is corporates or individuals, they tend to invest more towards higher education. So again, on the higher education part of our business, we expect growth to continue. Similarly, in the corporate learning part of our business, we expect growth to continue. So for bulk of the business, 90 to 95% of the business, we believe is it should operate as usual from a revenue standpoint. Of course, as we know, in a recessionary environment, you have to work much harder to achieve the same outcomes. And as a management team, and we will strive towards that and make sure that even if we have to work harder to deliver the same type of growth, we will put in that effort. The only aspect of our business that is somewhat potentially gets impacted by the recession is our K to 12 business, our school business, which is less than 7 or 8% of our revenue base. And also, we are a very small drop in the ocean. Our K to 12 revenue is less than $7-8 million annually. So given the scale of how massive K to 12 education is, we believe that from our perspective, because of the small base effect, we will be able to navigate those challenges. And also, we're in the business of wage arbitrage and outsourcing. So we're also hopeful some of our customers will be forced to outsource more to reduce costs and thereby presenting us an opportunity. So that was the comments on the projections and the upcoming recessionary environment asked by Keshav Garg. Next, there was a question on wage hikes. The way we've been managing this is, we are pretty distributed. So unlike some of our competitors who would have for every 2,300, 3,000 employees, 2 at most 3 centers, we have 15. So we're spread across 7 centers in India, 3 in Europe, and 5 in the US. So we're able to navigate some of these challenges because of the distribution of our talent pool. Having said that, of course, we are doing relatively better to our competition, but yes, we also see the same impacts that they do, but probably at a much lower scale in terms of both talent retention as well as talent acquisition. Keshav's next question was on EI design and the experience, 30 days in. So I think the experience has been, it's been outstanding. On the revenue side, we are learning that there's a lot of opportunity. EI has a very wide customer base, which is spread across the globe. Only 40% of EI revenue comes from North America, which also means that in the upcoming recessionary environment, this new customer base will help us navigate the recession. Second, only less than 50% of the EI's revenue comes from the top 10 customers. So there's very narrow customer concentration, which again gives us a huge opportunity. Third, on the revenue side, the value of each of these customers is on average much lower than what we see in the MPS e-learning side of the business. So less than, with the exception of one customer, most customers are less than $400,000 in revenue annually. So that again presents us a huge opportunity because there's excellent delivery, excellent quality that this company is providing. We now should be able to position and sell more products and services to this acquired customer base. On the delivery side and on the operation side, there's a lot more that we're learning. So what we're understanding is that the EI business is far more efficient and far better in terms of all aspects of delivery, from budget to delivery to quality, as well as in terms of technical innovation. We are now in the process of embracing the EI operating model in our overall e-learning delivery model, which should improve not only EI's margins, but our margins as well going forward. So there's this new level of operational efficiency that we plan to unlock through the EI delivery model. So those are the, I think, questions that came up first. There was a suggestion on integrated annual report. I'll request again the company secretary to review that and take that forward as well. There was a question on Vision 2027. How can we further that? Vision 2027 is really about building serious scale for the company, but also being a compelling and admirable company in the marketplace. And what we like to say here is that in this particular phase, we are trying to make sure that we continue to grow organically by looking at content, platform, and e-learning as one business, and also inorganically. So yes, we believe that this Vision 2027 is a good goal/target to head towards, and we're all actively working towards that. There was a suggestion on reduction of capital. The board of directors obviously reviews that periodically, and will continue to review that. So thank you for that. Thank you for that suggestion. There was a question on what customer feedback are we getting. I think one of the big feedbacks that we're getting from customers is to represent MPS as one company versus the addition of the various parts. Like I said, we've embraced that feedback and are moving forward more towards a market-based approach. So when we approach customers, we look at them as research customers, education customers, and corporate customers. We necessarily don't look at them as content, platform, or e-learning customers. MPS should be able to solve a research, education, or corporate customers problem using the various lines of business as tools that help solve the problem. So that's something that we embraced. There's been feedback from the shareholders on organic growth, again, which we've embraced, and we have a 5-point organic growth strategy that we've discussed in the annual report. So again, thank you for that. There was a question on what is the plan for the cash available on the balance sheet. Like I shared earlier, we will continue to we have an active inorganic strategy, which basically means acquiring compelling assets at compelling valuations. So that active inorganic strategy will continue, and whatever is surplus will then be distributed to shareholders, as we've done in the past through combination of dividend and buyback, as we've seen. You can expect the same levels to continue as we see no disruption in the business. There's a comment or question on content and platform stagnating. Like I described, that was pre-pandemic on the content side. The content side has been totally revamped, and a new opportunity has been presented post the pandemic, which we're executing on. So very optimistic about the content business. The platform business is going through a final year of consolidation, beyond which we will see robust growth. So again, we don't believe that is a stagnating part of our business. In fact, we've recently acquired Highwire, which has truly scaled our business. There was a question on a comment rather on e-learning going from loss-making to profitable, and what's next. What's next is this business will grow at upwards of 20% without EI design. This business will continue to expand on margins as it has operating leverage, so profits will grow faster than revenue. And this will really be the driver of growth for the group as the proportion of e-learning revenue increases over the coming years as a percentage of total revenue. There was a question or rather comment on dividend versus buyback. Again, our focus is to make sure that as a board we are solving for all types of shareholders, whether it is institutional investors or individual shareholders. The reason we've gone for a combined approach is to make sure that we are solving for all shareholders, not just for large investors or for institutional investors. So that's why the board of directors this past year decided to use a combination approach versus using a singular approach, which may only solve for one type of investor or one type of shareholder. Again, lots of congratulations. So again, thank you for that, both on growth as well as capital allocation, as well as the vision. Again, question on recession, which I have already answered. Question on Highwire and platform growth, which again, I believe I already answered. There was a question on product portfolio of the Highwire business, which I'll quickly answer now. What we've done essentially is that we have combined all our platform interests across MPS, MacPlus, Think, and Highwire under one umbrella brand. So we are marketing now going forward all our brands under the larger umbrella brand of Highwire Press. Today we have 5 product families from content submission and peer review to workflow and production to hosting to analytics to subscription and order management. In each of these product families, we have at least 2 SaaS-based product offerings. Going forward, we expect to stay true to these product families. Having said that, we can expect new product launches within each of these families, as well as new product launches that combine some of these product families. So a lot of growth plans, not just from acquiring revenue of more of the same, but also through new product development upcoming to be executed over the next couple of years. There was a question on talent, attrition, and what we are doing to manage the same. Again, like I commented earlier, our strong employer brand in the marketplace. We are one of the fastest growing companies in our space, as well as our distributed workforce does provide us an edge. Having said that, we are not taking that for granted, even though our attrition levels are lower than our competition. We've taken some key steps. So the first, of course, is on the recruitment side. We've instead of recruiting for a particular location or for a particular geography, we are approaching recruitment in a more centralized way, which looks at recruitment for talent, not optimized for fit and role, and not optimized for location. So we're taking a wider view of recruitment, trying to find the best talent wherever possible, and not insisting on what the location is. The second piece of it is we've implemented a more efficient onboarding process. We've seen attrition tends to be higher in people joining in the first 6 months or the first 12 months of the company versus what happens beyond 12 months onward. So we've analyzed the data, and now we're making sure that in the 0 to 6 months and 6 to 12 months, we're making sure that first the onboarding process is less bumpy. And also once the onboarding process is complete, the budding process and the development process is also super tight. So that's another aspect that we've completed on the onboarding side. On the employee engagement side, we've made sure that while there is a central view of things, that these activities and practices are more driven at the local level, so more at the individual center level, as well as the individual business level, making sure that speed and velocity in engagement activities continues. From a learning and development perspective, we have implemented lots of different initiatives, both across skill-based initiatives, as well as more managerial-based initiatives as well. So this is underway. Finally, what we've seen is that typically a person leaves an organization for 2 reasons. Number one, if the organization doesn't have growth, which I think MPS is definitely unlocking for better than its competitors. The second is an employee leaves their manager, and again through management development programs that start not just at the senior management level, but are more bottom up and begin at the team lead level. We are addressing, making sure that our team leaders to our senior management team perform the role of a great manager and truly oversee an employee's development versus just covering the rational aspects. And having said that, there will always be an exiting employee base. We are ensuring that as that employee base is exiting, they are leaving with a happy view of the organization, act as strong ambassadors of the company as they become part of our alumni database that we're engaging with. And also when an opportunity does present itself, come back as boomerangs, as we've seen in many parts of our business where people have left MPS and joined many years later. So again, I think I answered bulk of the questions. I will now hand it over. Actually, there's one final question, which was on market share. Just a quick comment, we're less than 1% of the market when we talk about the $300 billion of revenue. Second, no competitor of ours is larger than $300 million in revenue. So it's a highly fragmented market. So our goal as Vision 2027 is to, get to at least the larger scale that some of our competitors are at, There's going to be a blend of organic and inorganic approach. This market is ripe for consolidation. We believe that there'll be 4 or 5 big vendors that will last over the next 5 years as the big 4 or the big 5. And we want to make sure that MPS is one of those big 4, big 5. So again, a big thank you to everyone for all their questions and feedback, and congratulations. I'll hand over to Sunit to answer a couple of questions on receivables and the rupee depreciation.
Thanks, Rahul. So I would like to thank, in fact, all the shareholders. In fact, they have also cooperated this time that the number of requests for the physical annual copy has substantially come down. But we have taken note of the observations which you have pointed out, and we'll make sure that those are taken care of. The second question was in regard to the FX policy. We have a policy in place. So we have guidelines which are approved by the board. Under the supervision of CMD, we make sure that it is closely monitored. So our forward policy is very closely monitored to make sure that so it is against the receivables. So we take care of that part. And the third question was regarding receivables. So there are certain intercompany receivables which are also there. So these are more of a adjustment-based entries which have been carried out. And otherwise, the revenues are in the proportion. And we have a very efficient policy in place to make sure that the provisions are made for any debtor which is beyond a specified period. And there is also policy in place to make sure that the provisions are made effectively and efficiently. Rahul, these were the questions from the finance side. May I request and since you have already answered all the other questions, we can proceed further.
Sir, I would like to speak for a minute, if possible.
Yeah.
Sir,
Yeah,
my contention is that the annual report theme is fantastic. Going restart. I mean, the explanation which you have given on page 2 is fantastic, and I think we are moving in the right direction. Sir, one small question you have to answer, sir. Our signing auditor is Mr. Rohit Arora. Now, is he related to you? And with this, sir, I really, on behalf of the shareholders, would like to propose a vote of thanks to all of you, because I see all the directors present and all are smiling. That means when the directors are smiling, the company is having good growth, and there is good unity among the directors also. So on behalf of all the shareholders and the minority shareholders, through this VC meeting, I am very thankful for holding this meeting nicely, and you have given all the answers to our satisfaction, to at least my satisfaction. Other shareholders who have asked you questions, I was listening to their question also. You have answered comprehensively all the answers to our satisfaction, sir. Thank you very much and wish you all the best, sir. And next.
Thank you so much. Again, a big thank you to the board of directors. Yes, we definitely have an unprecedented board in terms of collaboration and commitment to the company. So again, a warm thank you to them. And I guess that is evident to people outside the company as well. Rohit and I are not related. We met through this engagement. We both share a very common first name and a very common last name. That's all. So again, thanks, Rohit, for the partnership. Sunit, back to you.
Thank you, Rahul. And I can confirm that we are independent to the company. I'm representing Walker Chindokan Company, which is the auditor, and I'm the partner over there. I can reconfirm my independence to the company.
So again, I want to thank all the shareholders for taking the initiative to join the. Yeah, I want to thank again all the shareholders for taking the initiative to join this meeting through video. I want to thank all our directors and auditors for joining this meeting as well. With your consent, I and the other board members would now leave the meeting and request all the shareholders for a healthy and safe future. I declare the meeting closed. I also authorize Mr. Sunit Malhotra, CFO and Company Secretary, to conduct the voting procedure and conduct the meeting. The e-voting facility will remain open for 15 minutes to enable those members who have not cast their vote can now cast their vote. The consolidated results of the remote e-voting and the e-voting at the meeting will be put on the websites of the company as well as CDSL and shall also be announced to NSE and BSE within 2 working days of conclusion of this meeting. Again, a warm thank you and congratulations to everybody. Thank you. Bye now.
Thank you, Rahul. Thank you, all the directors. Thank you, the auditors.
Thank you. Thank you very much.